First, I would like to introduce Professor Liu Xiaolei, Professor of Finance and Accounting at Guanghua School of Management, Peking University. Minister Giovanni Tria, who among his many functions, being a professor too, is also currently the advisor of the Italian Ministry of Economic Development, and Professor Andreas Kern, Associate Teaching Professor, McCart School of Public Policy from Georgetown University. Thanks again. So I was looking at some of the reports of the World Economic Forum, which is my alma mater, on Chinese fintech. And I learned that the development of the fintech in China went through 3 phases. There was a first phase, which was around computing and was government-led. There was a second phase, which was around internet, and that was like bottom-up led by corporation. And then we're currently in an hybrid phase where government and corporation are working together. And so there is collaboration and competition at the same time. And also the regulator, which had a wait-and-see approach in the first phases, now have become a little more observant of what's going on in the dynamic and start regulating, especially after one case of bankruptcy in the lending market. So I would like to ask Professor Liu, what can we learn by what China has done? And I remind you all that they have 1 billion people have access to finance, to credit, thanks to this transformation into the digital tech economy, which we're all doing, and COVID has only accelerated, and that they were able to lift small and medium enterprises out of crisis through this instrument. So there is a very positive side to it. And then I'm going to ask Professor Kern, who looks also at poverty issues and mitigating risk, what that can mean for Europe and the Mediterranean. And I'm going to ask Minister Tria more on the policy and regulatory side of the capital market, which today are not capital market, they're becoming data market. So Professor Liu, without further ado, what can we learn from what China did on how you can conjugate tradition and innovation in this space?
Thanks, Christina, for the question. In my own opinion, the one very important lesson is the fintech is actually a double-edged sword, and they have the pros and the cons. Using the big data and the machine learning stuff, the new technology, and we can do a best credit control. Therefore, we can grant credits to, for example, this SME, small and medium-sized enterprise, previously was not serviced by the traditional financial institution, at least in China. So in that regard, it's a very good thing. But we also have to be aware of the risk of this financial fintech development. Eventually, finance is an industry or is an area which is highly regulated globally in any country for a good reason, because financial industry should be regulated, because every risk, they're going to have a very big impact, because it is so-called multiplier effects. If compare all the other industry, and you can have a crisis, but probably financial industry crisis is the biggest one and gonna have the biggest impact on the whole economy. So that's why the financial industry are highly regulated. And in the past, during this fast growing of the fintech industry, during a quite long period of time, it's not regulated. So many of the firms in that industry are doing finance without any regulation, because this is a new tech and the regulators is still struggling how to regulate it. And at the very beginning, it's even not clear who should be the regulator, because in China, we have multiple regulators for different players. So for example, like this P2P platform in China at one stage is growing really fast. It's unclear who should regulate this platform. So it needs a lot of coordination among among regulators to pay attention to this new so-called phenomenon. I think the regulators also learns, so that later, for example, we corresponding to this ICO, the cryptocurrency stuff, and they are more cooperative, or they respond much quicker, etc. So I guess the lesson we would learn is a very good thing. The technology is neutral, and it's no good or bad in terms of technology. The key thing is how we make use of it. If we use it in a good way, it can really help and boost the development of economy. However, we should also be aware of the risk, and especially in financial industry, especially in China, because we have a huge market and billions of people with the same culture. Whenever this product or anything new comes out, it could spread out very quickly. So the people learn, and one instrument or one financial innovation comes out, it just grows up and affects many people in a very short period of time. Therefore, the regulators has to be aware of this potential risk this new technology may bring to us. Yeah.
And what do you think about the concept of pilot sandbox for regulator, where they are in the same space, corporations or startup in this field, so they learn about the technology and then they can regulate or provide a framework? Because I think over-regulation is also hindering innovation. Have you seen any of that happening in China at the moment?
Oh, yes, we do have. Actually, for example, I'm in Beijing, in the Beijing financial regulator. So basically, this financial regulator institution who's responding to the Beijing the city, and they actually have a sandbox where there are some financial innovative projects could enter into this sandbox, and you can apply, and they select the ones who enter into this sandbox, which means you could potentially the project is new and people are or even the regulator are unclear about the benefit and the risk, so they let you to try, and we do have that. Actually, it's already been around for at least 2 years. I think it's actually a very good way, because these new things comes out, even regulator have to learn as well, so everybody is learning.
And we spoke about the regulator. What about the corporate world? How do you see them play out? You know, you think about LiPay, which was one of the first that helped in this space. But then we mentioned the problem with the P2P, which Tuandai, I believe, was called the company that went bankrupt. What is the role of the corporation right now? What kind of appetite risk they have in this space?
Yeah, actually P2P, we have not just one, many have problem. Yeah. At one stage, we have over 1,500 P2P platforms. So it's really hard to imagine. In most of developed countries, there's 2 or 3 big players. There are many of them. And there's lots of problem. And then pretty much the regulator shut it down and closed down most of them. Right now, it's almost all gone. Probably only it's almost non-existent these days in China. For the corporation, I think one thing is, if you are doing financial things, you should be regulated, or you should apply for the specific license to do this. I'll give you another example, which draw less attention. Is insurance. Insurance is also highly regulated as well. But during the past a few years, almost all the internet companies, as long as they have, we call it flow, visitors, many of the internet company, they have a lot of access of this customer. So they are 2C companies, and they're building up this consumer base, and they want to do finance as well. One thing they could do is like give consumer loans to this customer. Another choice that have been trying is insurance, for example. And in order to get away, because they don't have insurance license, so the thing they are trying is they come up with something which was called helping each other. So mutual, it's like a mutual. But for China, even the mutual, you need a special license as well. So they come up with some special name. and then they allow people to pull up the money together into the firm. And then they said we're not an insurance product, but they operated pretty much like an insurance. And many of the people who participate into this think this is an insurance, and they put some money, and when they got sick and go to hospital, and they will apply to withdraw from this pool, the money pool. And then the platform actually charge a small amount of fees. Yes, their fee probably is lower than the premium where the insurance company was charging, but they are charging a fee. So basically, they operated this type of the products very similar to insurance without a license. And recent days, this again, the regulator pay more attention to this fintech risk, and these days, many of the company actually stopped this project. Probably only, to my best knowledge, there's only one left, which is the ones operated by Ant Financial. All the others, it has been a dozen probably. One is booming time, for example, like Didi, like Jingdong. So and Meituan, which is deliver food. So all these internet platforms are trying something like that, because financial industry is an industry which is profitable. But I guess one comments or suggestion I'll have to the corporation is, if you're really doing finance, you have to have a license or have to coping with the regulation. You shouldn't try to get away with the regulation. Yeah.
Thank you, Professor Liu. Professor Kern, I think that China right now gives us a glimpse of what the future might look like in fintech and in insurtech. If we look at the geographical area we are considering during this conference, so Southern Europe and the Mediterranean, or Europe and the Mediterranean, how do you see the future of fintech in that space, and what are, again, the positive sides after what we heard from Professor Liu, and the risk, the systemic risks that you see here, political, economic, but also this lift that could happen in terms of like small and micro enterprises in an environment that is not exactly highly developed.
Yeah, thank you so much for having me today, and it's a real honor to be on this distinguished panel for me today. Yeah, it is indeed an extremely important question, I think. For me, like my work has been concentrated a lot on the southern shores of the Mediterranean, so like the North African countries, and I think like I would like to frame my remarks or kind of like my comments around a bit more this, but doesn't also like reflect on Europe, and also like the engagement of the European Union in the region, and also reflect on the experience of China. I personally feel that basically like the Mediterranean region is kind of like facing one big challenge like over the past, say, 10 years or so, and this is youth unemployment. And these are employment outcomes in particular for the young. This is more so in the North African countries or partnership countries of the EuroMed, where we calculated a couple of years ago, just in a couple of back of the envelope calculations, that you need, for instance, in a country like Algeria, 4.3% economic growth just to keep unemployment at a constant rate. And so that gives you, like from a policy perspective, already kind of like a pretty big task of creating investments and mobilizing savings. And I think this is really where fintech can come in particular in that space. If you think that from an academic perspective, there exists an entire library that I don't want to quote, and I don't want to go through every single mechanism on the viability of finance for creating employment and economic growth. Here, I think what it can really do, in particular in the fintech space, is really it can provide like a very powerful vehicle to absorb domestic savings. I think in particular like for the Mediterranean countries and in Northern Africa, I think like one of the big key challenges is kind of like a lack of financial development, to the extent that there's an inability to basically like to deposit savings and also like to store money in a safe way. And I think like these mobile phone technologies and like what we're seeing in sub-Saharan Africa in particular show it into a, yeah, in Kenya in particular with M-Pesa, show us that basically like it does not only facilitate really transactions, but also like has become a powerful savings vehicle for a lot of households. This can actually like, and I'm going to come to this like in a second, because I think there's also like severe limitations to the way how we do fintech these days, and in general about like other problems that are attached to it. I think that there is also like really like a greatly underestimated two factors or two dormant sources of finance that no one talks about oftentimes. One is the role really of remittances and like the role of fintech and how fintech can actually boost remittances into the region. What we are seeing here in particular in the US, Mexico case is that there are these smaller type kind of like non-profit banks in Mexico in particular that are using remittances as kind of like savings vehicle for local projects, like funneling these funds like a lot more to MSMEs. Because what we are seeing thus far is that remittances are immediately spent. They are not kept oftentimes like in the region. They can also lead to all sorts of like complications with in currency relations and also like monetary policy management. And then there is a third factor, and I think this is something, truth to be told, and this is something that we and also in Europe have to think a lot about. And this is not only in Italy or in any other country, but also in Germany, that is something that we really need to think about. And this is the very reason of capital flight, see? And this is where fintech can actually provide like a very powerful instrument, a very powerful tool, because all of a sudden I can rely on cryptocurrencies to transfer kind of like illicit funds like across borders. I get a really big problem. Nevertheless, in particular in that region or in that part of the world, and we've been in Europe and our European banks have been greatly benefiting from that, is we've been absorbing a lot of this capital flight into our domestic banking systems and recycling it somewhere else. At the end of the day, like I think like also like, and this is what we are seeing in particular in the collaboration with China, is fintech has become really like also a vehicle for FDI, in particular if you think about, if you really think about like a country case like Egypt, where Aviv is not only building the 5G network, but they have also like built an AI lab. And most likely the 10 cents of this world are not far to follow. What really makes me remarkable and kind of like, and that makes me worried about a European perspective, because I think Europe has been engaging with the region for a very, very long time. Also like the United States have been engaging with this region and for a very long time, not only in terms of foreign aid, but also like in financial collaboration. If you think about like the Banca d'Italia that has like a long-standing technical collaboration and cooperation with the Central Bank of Egypt. What we're seeing is that China is really not, I mean, this is how they call this, like sometimes in the scientific literature, it's not only the new kid on the block, but it's a major player on the block, okay? And so this has something to do with the Belt and Road Initiative that brings a lot of investment, and that relies not on traditional finance. If you think about the telecommunications and also like in the fintech space, it is not only that they bring the infrastructure, they also bring the finance with it at historically low, heavily subsidized credits. This is something where we Europeans cannot compete simply, okay? We do not have 5G technology, when we do not have these extensive subsidy programs for our like multinational corporations to go abroad and to basically like start building new markets. What I've seen in recent reports from the Rhodium Group as well is, even though like China's engagement seems to be declining on a global level, I mean, make no mistake, I mean, we are using all sorts of like financial vehicles from offshore financial sinks and the like in order to kind of like promote investment. So today, like when you look into FDI statistics, and this is a finding by the IMF, is like 70% is shadow FDI. If you think about the United States, like the largest FDI partner for the United States is Luxembourg of all places. And I don't know where all the textile factories and all sorts of other things are in Luxembourg that would justify this amount of FDI. And so I think China has upgraded greatly as well and diversified its portfolio. They use different investment vehicles and to be very active in this region. And I think looking at the bilateral like political relations, there are strong commitments. What comes now to this is also like a completely new source of like financial firepower that comes through these so-called swap lines, the RMB swap lines. And this is something I think like a lot of people have greatly underestimated, is that basically like, I can break the dollar dominance, and this is something that will be relevant for finance if I can actually go into bilateral trade agreements and then tie basically like all trade transactions into the RMB space. If I do this and tie this up now like with digital RMB or basically into the digital space, and I will have like relatively frictionless international trade and also financial collaborations. We have seen this in the past in other formats and in other forms, how you can actually decouple from kind of like the global business cycle through doing this type of thing would be also like very much in the best interest of China to do so. And then what I find really striking is that basically like even though the European Central Bank and also like European central banks have been very active in this fintech space in terms of like thinking about like, okay, how should fintech 2.0 look like in Europe? China is far ahead of the game here, and also like the PBOC is far ahead of the game. And it's the technical cooperation partner for most countries in the southern part of the Mediterranean in building the capacity and building digital currencies. And this is something that I think like we oftentimes forget. And I personally feel that Europe is in a very challenging position right now, in particular, those countries that are the traditional collaboration partners in the region, like be it Italy, Spain, we're also like the southern European countries because of the outfall of the pandemic. And I think that basically like this will be a key challenge for Europe to mobilize basically like the financial firepower to counter well kind of like the Chinese commitment. From the US perspective, when it comes to fintech, if you really think about like Jerome Powell's approach to it, and basically like in his statement on Monday that the Federal Reserve is writing a white paper, that means that basically like I will still have to send a check when I pay my rent here in the United States instead of using an app. And that will give China like a real neat competitive edge right at the moment, because they've been coming very strong out of this recession. And I think that there needs to be a critical engagement with this topic. And I think there needs to be like a very critical engagement also like on the regulatory side on this. Thank you.
Thank you. Minister Tria, last but not least, as they say, actually the most senior. So could you help us connect the two dots? So we have heard on the one end what has happened in China with the fintech and what they were able to do from a positive side, the regulatory side. Then from Professor Kern, we have heard the critical turning points of development in the Mediterranean regions and the different players. I used to work at the IADB, and China was one of our members. So I rather have them as member and work with them, because then we can all collaborate even when we compete. And if there is not a level of a certain dialogue, it becomes very difficult for the reason Professor Kern said, because they are way more advanced and they have a powerhouse behind, and they're not shy to use it. What do you think Europe should do in this space, and how do you think really we can? I know there are a lot of initiatives. There is Target, there is PISA on future of payment in Europe and what that can mean for the digital transformation of Europe, but also the relationship between Europe and the Mediterranean area and China. I give you the most difficult question.
No, yes, I just would like to start saying that now, because we are talking about financial market and a specific area, the first thing that we have to keep in mind that I think in this period, the main geopolitical issue mainly, not only, but above all in the field of finance and fintech, is not just about enforcing global rules. It is about who makes them. This is the big strategic issue from a global point of view. Then I'll come to our subject, our topic specific. I'll talk about, of course, fintech and Euro-Mediterranean with the reference to the area that revolves around the Mediterranean, defined as the MENA area, Middle East, North Africa, or sometimes to the broader definition of wider Mediterranean. I will focus on the strategic competition between China, Europe, and the United States in this area that I consider particularly significant also from a global point of view. And I'll try to explain, I want to try to explain why I think that in the field of, particularly in the field of fintech, China has a specific competitive advantage and also a specific strategic interest in this field. I will explain why. Regarding European Union, it's your first question. What we can say that for a long period, there has been talk on a potential process of economic integration of the Mediterranean area. You remember the last 2 decades, maybe or more, including the north and south shore with its extension in the east. But I believe that we Europeans have taken steps backwards. The European Mediterranean policy should have mainly exploited the advantage, or if we can call an advantage, of proximity in its dual sense of geographical proximity and historical and cultural proximity. But these advantages could only play a role in the Mediterranean integration if they are made effective by European targeted policies that have not materialized yet. Proximity is not an advantage in financial markets dominated by digital technology, and less so is not an advantage in trade, also in trade of goods and services, because also in trade, the proximity advantage depends on the degree of the development of the global transport and communication infrastructures, just to think on the Belt and Road Initiative. The geographical and historical cultural proximity with Europe could, on the other hand, become crucial as regards the integration with the Mediterranean labor market, which is, however, very far from finding any solution. In this context, the economic development of the area is certainly more and more led by East, in particular by China's new global role. Anyway, in order to understand the potential for fintech in this area and the specific strategic importance, both geopolitical and economic importance, for China as well as for its Western competitors, a good starting point is to look at demography. Sorry, but we have to start from the demography. First, the overall population, maybe you already spoke about that in the previous sessions, but I want to remind that the population of the wider Mediterranean countries was in 2000 about 380 million of people and will grow to 590 million in 2030, outstripping Europe. Second, these are young population. Over 40% are between the age of 15 and 24 years old, and the growth rate of the active population since 2000 has been almost double the growth rate of the population as a whole. Third is a youthful and tech-savvy population. Over half of the MENA region have mobile penetration rates at 70% or higher, and this is the second highest penetration rate in the world. Finally, recent data shows that 67% of MENA residents actually don't have a bank account, compared to 65% of Europeans who have one. Yet, at the same time, most of the countries are well-wired society. This is the context. All these factors explain why the potential of fintech in the area is very high. I would like now explain why Chinese fintech companies have in the area very weak competitors and why this is so important at a global level. In the field of fintech, China is particularly advanced because in the face of Chinese economic growth in the last decades, characterized in the last decade by the transition from manufacturing to services sectors and the development of the technology sectors, perhaps the most lagging part was the financial and banking infrastructure. Where traditional financial and banking market infrastructures are weak, as in China, more space is created for fintech with the aim of including in the financial market shares of the population not covered by traditional banks, and thus also increasing efficiency and flexibility of the financial system. This has been, in my view, if I can say, the culture medium for the growing strength of Chinese fintech companies, which have also benefited at home from the enormous development, huge development of the e-commerce platforms and digital giants as Alibaba, Tencent, and the others. This experience, I think, is invaluable for occupying spaces in the third countries following e-commerce and economic penetration of the Chinese companies. I mean, it's important, this experience for occupying space above all where, as in the main area, weak financial and banking infrastructures from which a large sector of the population and the small and the micro enterprises are excluded, this weak finance infrastructure coexists with economic growth and, as already mentioned, with a young but highly digitized population. In other words, the economic penetration of Chinese fintech companies benefit from the experience acquired. I don't know if my colleague in China agree on this opinion, from the experience acquired on the ground, because they were the first to face the problem of acting where the traditional banking system was still weak and absent. Moreover, with its Belt and Road Initiative, China has extended, of course, its economic trade relations to more than maybe, I don't know, these right numbers, maybe more than 100 countries. And it's clear that the financial relations go hand in hand with this. And we know also that the wider Mediterranean is the obligatory passage by land and especially by sea to reach Europe. But why do we see a delay of the European or Anglo-Saxon fintech in opposing or competing with the Chinese fintech? I believe that one of the causes that the incumbents in the financial field, as maybe in other sectors, and the incumbents in the financial field, that is the traditional financial and banking infrastructures, are much stronger in advanced countries where these infrastructures are based on a set of well-defined rules. The incumbent firms often fail to harness the next wave of innovation within their own industries. The problem is not that incumbents are blind to the threats posed by startups, but they don't recognize the radical potential of new technologies and processes. Focused on short-term profits, they tend to assess disruptive innovation with a kind of incrementalistic mindset, and thus fail even to imagine how a new entrant could overturn an entire sector seemingly overnight. For central bankers, then, the key question is whether payment systems themselves are on the verge of being disrupted. After the 2008 financial crisis, it was generally assumed that the onerous regulations and capital requirements would deter new entrants to the banking and financial sectors. But that presumption is now being challenged, not least by Facebook, which caught most central bankers by surprise when it unveiled its Libra currency project 2 years ago. I remember a dramatic meeting of G7 Minister of Finance and governors of G7 central banks that I remember discuss a challenge for the first time to the Bretton Woods system that 70 years ago established the monetary system, the current monetary system in some way. Then it's no coincidence that as the financial academic markets develop in China as well, the regulatory authorities have sought to place greater order by restraining the action of large fintech companies such as Edge Group, Prof, Bank, and the others. Here, I would like to raise another issue, the broader issues of competition between Europe and United States and China on the international financial infrastructures that are based on the dollar as a dominant international currency. And this issue is linked with what is happening also in the wider Mediterranean. The strength of the dollar and the financial infrastructure based on the dollar no longer, as we know, correspond to the economic and commercial strength of the issuing country. This strength is based on the American and partly the European legal system. But it's clear that the issue of currency competition arises, especially from China, because of its economic, of the Chinese economic strength and the growth of its presence in global markets. Perhaps it's not by chance that in the West, the technological revolution brought the challenge of private currencies to the monetary system originated, as I said before, 70 years ago in Bretton Woods. And at the same time, the Chinese government launches the digital renminbi project ahead of all the other central banks, and then imposes a halt to the free activity on the most powerful Chinese fintech companies. And finally, the ECB, European Central Bank, and other central banks plan their own digital currency. I don't believe that the competitive currency challenge that opens up and the search for the new global monetary and financial rules will be a game between, of course, Europe, the United States, and China, a game that will be played on their respective internal markets. This challenge, on the contrary, probably will be played out on third countries, where the majority of the world's population lives, and which will be, as Africa, the next arena for global development. And from this point of view, the importance of the Mediterranean, and especially for the wider Mediterranean, lies not only in its geographical importance as a crossroads of the Belt and Road Initiative, and especially of the Maritime Road, and as a hub of penetration between three continents, Europe, Asia, and Africa. The main area is, as I already said before, an area in demographic growth, young population, and represent a bridge for Africa, where the development requires to leapfrog technologies that don't have the same built-in infrastructure as in the United States and European Union, and where the issue of who makes the rule of financial markets will be part of an open game. I have the strong impression that Europe is yet lagging behind in this respect. This is my view.
I think, and I want to go back to Professor Liu now for a reaction to what we have heard, because we talk about your country, but it would be nice to hear from you what China is doing in the cooperation on fintech, in particular in the Middle East, if possible, and what is your view of how you see the future of cooperation between Europe and China in this. And I think there are two pillars here. One is financial innovation, so help financial innovation, because you are a leader. And on the other side, there is inclusive growth. We're talking about area where we do need sustainable and inclusive growth. And so how do you design a financial innovation that can guarantee that in cooperation with Europe, for example, in areas like the Middle East and the MENA region, where the minister reminded us the population is tech savvy, is young, but is unbanked.
Okay, great. Because the other two guests are also talking about liberal and currency swap. Let me say something about our DCEP, so the central bank digital currency, which already run a pilot program in China in several cities. So what I believe or think, the central bank, we call it the DCEP, digital currency and electronic payment, could actually really help or facilitate the China-Europe both economic or culture exchange. For example, in the last year is a special year, but in 2019, it's like over 7 million people, Chinese, travel to Europe. So the Europe is like the number two. The first one is Asia, our target country in terms of tourism. So there's a lot of people travel, and also in terms of the trade, to my best knowledge, China is the third largest partner for EU export of goods and the largest partner for EU imports of goods. So there's a lot of tourism and also trade activities between China and EU. And for example, when we're talking about the bank account, yes, there's lots of people without a bank account, but even for developed country where people have a bank account, but you don't have a China bank account. While people, European, for example, travel to China, it's actually a lot of inconvenience, because even for LiPay and WeChat Pay, you need a bank account first in order to using their electronic payment system. So this without the banking, so bank used to be the most important financial infrastructure in the past, but it's very expensive to building up bank branches. However, in future, and we mentioned the example, we talk about the example of Kenya, the Embassy example. In the future, there is the potential that this mobile phone facilitated with the new technology or the ID stuff and be able to serve as the new financial infrastructure. Because although in the country you mentioned, many people doesn't have a bank account, but many people have a cell phone, has a smartphone. And if the smartphone could be used as the financial infrastructure in terms of opening an account and make a payment, that will be extremely convenient. And China has been trying in that regard in terms of our central bank, DCEP, although it's still slow in terms of process. But also, Christina, when you talk about this, the innovation project, I know there's some innovation project using the cell phone as a post machine, the point of sale machine to take money. In the past, you really need a machine. Now we can have a cell phone and a cell phone and making the payment directly. So if that's doable, or if you can just open an account without visiting a bank, there will extremely facilitate the financial service to the people, to this, we call it long tail, the population. So I would hoping or expect the further development of this DCEP would improve and facilitate both the China-Europe relationship and maybe also the country which doesn't have that much of the coverage of bank facility. Yeah,
are you aware of any collaboration going on right now, for example, or pilots between China and the region we're talking about in the fintech space? I don't know, partnership between a telco and a bank, or some sort of piloting of the mobile payments you mentioned, or digital credit card. I think in Europe we have one called Revolut, for example, or AI and cloud. Is there any such support and collaboration going on?
Well, Alipay, I know Alipay has branches or partners with many companies in Europe. But this central bank DCEP, to my best knowledge, it hasn't been used as international remittance or settlement yet. It is still the pilot operated internally. But there are a lot of suggestions, proposals, suggesting it's a very good way to make use of it.
I think like Professor Kern put the attention on remittance, and now you're mentioning again, it is an area of high interest, especially because through cryptocurrency and the ledger technology, you cut, let's call them the middlemen and the time of transaction and some of the costs. Right now, if you use Western Union, even if you use it online, your fund is not going to get a lot of money because the charges, the fees are ridiculous. So there is also an inclusion element here, and we do know that remittance are a big engine for development in the country where they get sent back by the immigrants workforce. I want to open it up for question and answer. We have 15 minutes, and I know Professor Fardella is on the line, so I would suggest if anyone wants to start with the questions, just to open their mic, introduce themselves, and then ask the question. It's like when you're teaching classes, I don't see the faces, so I cannot call on people. Okay, and I don't see raise hand. Let me see the chat, because at times people put things in the chat. If not, I keep questioning. Okay, I will keep asking questions then. There is a subject that we have touched, which is the regulatory framework at the global level, and I think it's Minister Tria put the attention there. And in general, what used to be a pretty standard flow of multilateral agreements in recent years has blocked. We have more than one polar or two polar. We have multipolarity, and we have agreement that are more on at the bilateral level. And we were even talking about direct financial investment in countries rather than using multilateral organization to do financial support. Can I ask all of you a comment around that? Where do you see that going? Because it's particularly important for what we're talking about. If there were to be a collaboration or some sort of overarching regulatory framework in the fintech area and one localized to the Mediterranean area, where will we do that? Which would be the platform where we're going to negotiate this? Are the channel open? Who wants to answer first?
I think that
Minister Tria, please.
Of course, we need to shift from a kind, what you called a bilateral confrontation to a multilateral confrontation. This is not just on how to regulate fintech, because I think fintech is linked to fintech means that how the technology is changing the financial market. And the technology is a very powerful engine of change. And for example, is one of the main factors that causes the new debate on the possibility, and for some economists, on the need of an international currency, like that imagined by Keynes in Bretton Woods. I want to remember that just a decade, more than 10 years ago, the former governor of Central Bank of China, Liu Xiaolei, wrote a paper before G20 meeting in London, asking for a new rules for the monetary system. And just to be synthetic, the idea is how to refresh in some way the use of SDR, the special rights issued by the IMF, and in this way to have another kind of currency, effective currency. Now we are discussing again. During this pandemic, IMF decided to issue I think 650 billion of SDR just to finance the developing countries. Now there's a big debate. I want to keep together the discussion on fintech. There is a technological issue. Also, as my Chinese colleague said just before, of course, we don't have a Chinese bank account in Europe. Then the tourists that come here want to pay in easy way. Also, Libra try to justify as Libra as just a means of payment for people that go around the world, but it was like a stable coin, then a kind of a new currency. Then the problem is, which is the link? I don't know, but I think there is in the study of the Chinese government strategy, the link between fintech, the penetration of fintech in third countries, maybe I don't know in Europe, but in Africa and in Asia, in third countries, and the new digital yuan, the new digital renminbi. Also, digital renminbi in the future will be an important factor for the internationalization of the Chinese currency. And the fintech is one of the possible channel for that. Now it's not clear what will happen, but there is some coincidence of what's happening. How to reinforce in China the rules, try to use the digital renminbi, because now they want to use maybe all the technological channels of the digital companies, the fintech, to use the new digital currency. And what will happen in the world, the confrontation on this issue? Because we know that after the so-called trade war, I hope that we will not have a currency war or something else. Then this is, the idea is that we have to transform as soon as possible this a kind of bilateral or trilateral, as a bilateral confrontation between China and US, supported in some way by Europe, in a multilateral confrontation, just to establish new rules, new shared rules, and the rules shared by all the main countries. We have to remind that if you look again at the demography, if we put together the population of the United States, China, Europe, and maybe Russia, this amount of population is less than half of the global population. Then we have to have a new big agreement for shared rules, looking also at what will happen in this other part of the world, where half of the world population lives.
Thank you. I have a question from Professor LaPenta from John Cabot University, the American University here in Rome. And I think Professor Kern, you could answer this, and then maybe Professor Liu, and then I'll just wrap up. And the question is, what role do you think AI, artificial intelligence, might have in the future of fintech, specifically robo-advisors and the role they might have to democratize investment that create the biggest gap worldwide in financial services? Professor Kern. So AI, services and democratization.
Yeah, I mean, see, I think AI opens like a whole new dimension because it allows us to process data in a much smarter, faster way. It allows us to basically to provide services and replace humans to a certain degree. At the end of the day, and I think I wanna second Professor Tria's comments. It is really about the regulatory framework that will decide about all this. And I think going back to the other question is, I can have the best technology under the hood if basically my regulator is choking off, so to say, the access to it. And I think what we are seeing right now is that China is moving so fast in that space because they are, I think, tired of waiting for us Europeans and Americans to get a seat at the table. If you think about basically these quota debates on the IMF and also on the World Bank, they're age old, and they started sometimes in the mid 2000s, where China felt that it's underrepresented in these organizations. So we were not able to reform our quotas and basically give the US leadership anytime soon away. So what did China come up with in 2011 was the Belt and Road Initiative that has the financial firepower of the IMF. Okay, so it is what we're seeing right now, and this is also what we're seeing in the fintech space and in the financial space. Is I think they're looking for ways and for vehicles in order to make this work for them. And one very smart way of doing it is I bring the mobile phone technology, because that is where the AI needs to come in. I need to have technological prerequisites to basically to make this all happen, and for that I need enormously fast internet. If you think about that, China is already experimenting with 6G in certain cities and towns, then basically you're in a completely different ballpark altogether. Secondly, you have the fintech technology for the digital renminbi. I think these experiments are very important for the Chinese administration. Why? Because you can actually weed out a lot of the corruption, a lot of the illicit financial flows. That is also very important for political control, because if I can control my digital currency and all the transactions with it, I can actually also trace everyone in the system. See, now I can also tie this to all sorts of other data, and then AI will then later on help me to to make a relatively good picture. And my final point that I want to make is that China has become also enormously attractive to these governments, in particular in the MENA region, because they come with a very different mindset. See, they sell their Belt and Road Initiative, all these collaborations as a win-win situation, whereas the traditional donors, the IMF and also the World Bank, come in and say yeah, well, democracy, central bank independence, we want to have governance reform. And this is oftentimes also threatening the very existence of these elites. And I think China is exactly exploiting these loopholes very cleverly, and using fintech as a new vehicle for doing this as well.
Thank you. Professor Liu, do you want to answer the question, since you also have a tech background, on the AI and the role robo-advisor can have on the financial services and the democratization of the investment platforms?
Yeah, absolutely. The AI, because of the learning using the big data and automatic operation stuff, it did save a lot of human power, or it can provide service to the people so-called long tail people, which previously was not able to get financial service. So in that regard, it's actually really helping in terms of inclusive finance. But we also has to be aware it has also have some kind of a potential, is probably not a risk, but other issues rising up. For example, there has been evidence showing cases showing the platform companies using AI and big data to give customers individual prices. So right now they grabbing all the economic called consumer surplus, because they know who can pay more, they charge you more. And if you cannot pay more, they charge you less because they know everything about you. And so they give differential prices, and et cetera, et cetera. And there are some debate in that regard in terms of how to make the best use of data. And this relates to in the Europe, because there's this GDPR, which protect the data privacy. And there are some debate about GDPR, the data privacy. Yeah, it's nice to protect your data, but we have to be aware this may also kind of have some hurting about the growth, because data is an asset. It does have lots of value. So how to protect the privacy and at the same time make the best use of the data probably is the next step we're facing. Everybody facing China and facing Europe and facing globally, including data sharing and even the data tax, etc. So certainly only through the cooperation, both at the regulatory level, government level, and the corporate level, probably we could collaborate together in that regard, eventually make this a better world. I agree with Kern, and China actually like a win-win situation, because in our culture, we believe only win-win can last for the long run. If you just cutting a bigger piece of the pie, hurting others, you could benefit in the short term, but they will not last for long. So we think only the win-win situation can be a long-run solution. And so we hope, and this fintech technology and has both the pros and cons, if it could be used in the good place, it could solve lots of issues, but certainly it needs lots of cooperations and to have to deal with this remaining issue, like the things related to the data and the risk, etc.
Thank you. I think that you started saying that technology is neutral and is what you do with it that can enable or disable. In the financial market, clearly, the systemic risks are way more dangerous, as we have agreed. We do need a global framework based on shared rules and how we get there, and that will have a positive impact also on the region we're talking about. And I think from Professor Kern, I heard that we need to wake up and catch up, because we are a little bit farther down the pecking order compared to where China is in this space. And if I can add a last comment, it really looks like we're going from a financial market based on capital to financial market based on data. And then we didn't mention Internet of Things, but the fourth industrial revolution had all these series of technology, and all can play differently, but data is the currency. So with that, I want to thank you for your time, your intellectual strength and thought leadership. I hope that everybody has enjoyed this conversation, and this is one of many other times that we can all get together and try and discuss what we said, like a shared approach and shared value to what is at the end of the day, progress of humanity as one. Thank you.